Hi, it's been a while and I can understand how easily we can get caught up with a lot of deadlines. But hey, today's upload is the 2022 Lab pre-week on taxation based on the syllabus for the 2020 and 21 bar examinations that were missed. And we will include 2019 bar questions and answers in between. Special thanks and mention to the source of this material. And to quote the author, he said, I'm not registering this work with the Philippine Intellectual Property Office, but I own the materials from the moment I created them. All persons are allowed free use of these materials, which may be reproduced in any form or any means, electronic or mechanical, including photocopying or xeroxing without written permission from the author, so long as the authorship is recognized. Please disseminate and distribute to those in need of the materials. That's what I'm doing. From Abelardo T. DOMONDON. So this is in preparation to maybe next year's bar questions because we already have the three questions asked in this 2022 bar exam. Basic principles of taxation in the Constitution. The exercise of the power of taxation is considered as plenary and unlimited because the very existence of the government is dependent for its existence upon the revenues collected from taxation. Are there any limitations imposed upon the power of taxation? Why? If there are, what in general are the limitations? Suggested answer: yes, the limitations exist in order to prevent an abuse of this otherwise unlimited power. The limitations on the power of taxation are the following. A. Inherent limitations. These are part and parcel of the power of taxation and originate from the very nature of taxation. B. Constitutional limitations. These are the restrictions imposed by the Constitution. The limitations on power to tax, not assumed. Kasamahan Realty Development Corporation, now known as Stag Trading Corporation, versus Commissioner on Internal Revenue, CTA case number 6204, 2005. The failure of a tax measure to achieve its objectives is not a ground for its nullification. That is in the case of Soriano versus Secretary of Finance, GR 184450. Number two, taxation as an attribute of sovereignty is peculiarly and essentially legislative. As a power, it had been described as broad, unlimited, supreme, and plenary, subject only to constitutional restrictions and its inherent limitations. Discuss said inherent limitations. Suggested answer: the inherent limitations on the power of taxation, which are also known as the elements, tenets, or characteristics of taxation, are A. The tax is imposed, or the tax imposed should be for a public purpose. B. There should be no improper delegation of the taxing power. C. The power to tax is limited to the territorial jurisdiction of the taxing government. D. Exemption of government entities is recognized. Letter E. Observance of international comity such that property of foreign sovereigns are not subject to taxation. Some authorities include double taxation. While this may be so, it is submitted that double taxation is properly a constitutional limitation. Number three, the European Union General System of Preferences, like EU GSP Plus, is a special incentive arrangement for sustainable development and good governance in the form of zero duties. It is a unilateral trade arrangement which offers zero tariffs on 6,274 products, or 66% of all European Union General System or European Union tariff lines. It is a part of the broader Generalized System of Preferences, or GSP, of the EU, and as a developmental tool, it seeks to encourage export diversification in developing countries. Among the industries that enjoy the privilege is the pineapple industry. In order to continually enjoy protection under EU GSP Plus, the Philippines should ensure that the EU monitoring team must not identify a serious failure to its effective implementation of any of numerous conventions, which include international drug control conventions, UN human rights conventions, International Covenant on Civil and Political Rights or ICCPR, etc. Unfortunately, the EU GSP Plus monitoring team in its last visit expressed grave concerns on the Philippines' performance on human rights, the war on drugs, etc. It now appears that the Philippines might lose the privilege of enjoying the benefits under the EU GSP Plus. To provide means for the rehabilitation and stabilization of the preserved pineapple industry so as to prepare it for the eventuality of the loss of the EU GPS privilege, Congress passes a law increasing the existing tax on the processing of preserved pineapples on a graduated basis. All collections made under the law are to accrue to a special fund to be spent only for the purposes enumerated therein, among which are to place the preserved pineapple industry in a position to maintain and ultimately to ensure its continued existence despite the loss of the EU GSP Plus privilege, and to afford laborers employed in the industry a living wage and to improve their working conditions. Mr. Omar Reyes, a pineapple planter, files a suit questioning the constitutionality of the law, alleging the tax is not for a public purpose, as the same is being levied exclusively for the aid and support of the preserved pineapple industry. Decide the same. Suggested answer: the tax is valid because it is for a public purpose. It is an exercise of police power which is for the general welfare of the entire country, because the preserved pineapple industry is one of the pillars of the Philippine economy which affects the welfare of the state. Republic versus Bacolod Murcia, GR L19824. It is a pillar of the Philippine economy, providing employment for thousands of workers, providing much needed foreign exchange, and otherwise contributes to economic development and progress. Public purpose is the heart of a tax law. Planters Products versus Fertifil Corporation. This is the 2008 548 485. Explain the general rule on non-delegation of the legislative authority to tax as well as its constitutional basis. Suggested answer: there should be no improper delegation of legislative authority to tax. The power to tax is inherent in the state, such power being inherently legislative, based on the principle that taxes are a grant of the people who are taxed, and the grant must be made by the immediate representatives of the people, and where the people have laid the power, there it must remain and be exercised. Commissioner of Internal Revenue versus Fortune Tobacco Corporation. The constitutional principle of separation of powers ordains that each of the three great branches of government has exclusive cognizance of and is supreme in matters falling within its own constitutionally allocated sphere. Avocado Guru Party List versus Ermita. A logical corollary to the doctrine of separation of powers is the principle of non-delegation of powers, as expressed in the Latin maxim potestas delegata non delegari. Protest, which means that what has been delegated cannot be further delegated. Again, potestas delegata non delegari potest. The same case, abacada. This doctrine is based on the ethical principle that such delegated power constitutes not only a right but a duty to be performed by the delegate through the instrumentality of his own judgment and not through the intervening mind of another. What is the extent of the legislative power that may not be delegated? Suggested answer: the legislative power that may not be delegated is the discretion to ascertain the following: A. Basis, amount, or rate of tax. B. Pursuit of property that is subject to tax. C. Exemptions and exclusions from tax. And D. Manner of collecting the tax may not be delegated away by Congress. La Suerte Cigar and Cigarette Factory versus Court of Appeals. What are the constitutional limitations or restrictions upon the taxing power? There are two kinds of constitutional limitations: provisions directly affecting taxation, direct or specific limitations, provisions in the Constitution that contain the words tax, taxation, or others of similar import. Some examples of the provision directly affecting taxation are prohibition against imprisonment for non-payment of poll tax, majority vote of Congress for grant of tax exemption, President's veto power on appropriation revenue and tariff bills, provisions indirectly affecting taxation, or indirect or general limitations, provisions in the Constitution that do not contain the words tax, taxation, or others of similar point. And some examples of constitutional provisions indirectly affecting taxation are due process, equal protection, religious freedom, non-impairment of obligations of contract. Under the 1987 Constitution, may the government tax income of non-profit educational institutions operated by religious orders? What policy considerations are to be taken into account? No, the revenue of non-stock, non-profit educational institutions which are actually, directly, and exclusively used for educational purposes, irrespective of whether or not they are operated by religious orders under the 1987 Constitution, are exempt from income taxation. La Zalian Educational Innovators versus Commissioner of Internal Revenue, 2019 case. The policy consideration is to encourage the establishment of educational institutions which are non-profit motivated. The tax exemption would translate to lower tuition fees, providing access to education for all. What does constitutional equality in taxation mean? Equality of taxation means that all persons who are similarly situated should be treated alike, both in privileges conferred and burdens imposed. Constitutional equality in taxation means the application of the concept of equal protection of the laws, which prohibits discrimination other than these instances where there is valid classification. Thus, persons who are similarly situated or who belongs to the same class should be given by law the same protection and privileges, as well as impose the same burdens and obligations. The constitutional guarantee of equal protection is not violated by an executive issuance which was issued to simply reinforce existing taxes applicable to both the private and public sector. What are the requisites for a valid classification then? All that is required of a valid classification is that it be reasonable, which means that the classification should be based on substantial distinctions which make for real differences, that it must be germane to the purpose of the law, that it must not be limited to existing conditions only, and that it must apply equally to each member of the class. This court has held that the standard is satisfied if the classification or distinction is based on a reasonable foundation or rational basis and is not palpably arbitrary. The Equal Protection Clause recognizes a valid classification, that is, a classification that has a reasonable foundation or rational basis and not arbitrary. Drugstores Association of the Philippines et al. Versus National Council on Disability Affairs. Alternative answer: the United States Supreme Court has established different tests to determine the validity of a classification in compliance with the Equal Protection Clause. The recognized tests are strict scrutiny or compelling interest test for laws dealing with freedom of the mind or restricting the political process. Applying strict scrutiny, the focus is on the presence of compelling rather than substantial governmental interest and on the absence of less restrictive means for achieving that interest. B. The rational basis standard of review for economic legislation. Under this test, laws or ordinances are upheld if they rationally further a legitimate governmental interests. The standard is met if the classification or distinction is based on a reasonable foundation or rational basis and is not palpably arbitrary. A third standard, denominated as heightened or intermediate level of scrutiny, is in white light. This was called immediate scrutiny. Intentional discriminations against members of a quasi-suspect class violate equal protection unless they are substantially related to important government objectives. White light. Executive Order number 97-A specified the secured areas that shall be completely tax and duty-free in the Subic Special Economic Zone, or SSEZ, consisting of the presently fenced-in former Subic Naval Base without granting the same to those outside the SSEZ. Is there a violation of the Equal Protection Clause? No. Equal protection allows a reasonable classification. Please forgive the background. Letter A. Significant distinctions exist between the two groups. Those outside of the SSEZ maintain their business within Philippine customs territory, while those within the SSEZ operate within the so-called separate custom territory. To grant the same privileges would clearly defeat the statute's intent to carve a territory out of the military reservations in Subic Bay where free flow of goods and capital is maintained. Letter B. The classification is germane to the purpose of Republic Act 7227 as held in TU. The real concern of the law is to convert the lands formerly occupied by the U.S. military bases into economic or industrial areas. In furtherance of such objective, Congress deemed it necessary to extend economic incentives in terms of a complete package of tax incentives and other benefits to the establishments within the zone to attract and encourage foreign and local investors. See, the classification is not limited to the existing conditions when the law was promulgated, but to future conditions as well, inasmuch as the law envisioned the former military reservation to ultimately develop into a self-sustaining investment center. The declassification applies equally to all retailers found within the secured area. As ruled in TIO, the individuals and businesses within the secured area, being in like circumstances or contributing directly to the achievement of the end purposes of the law, are not categorized further. They're all similarly treated, both in privileges granted and in obligations required. Coconut oil refiners versus stores, ETC 137132527. What is the scope of the tax exemption of all schools, whether non-stock, non-profit, or propriety? Non-profit, including those that are cooperatively owned. Suggested answer A. All donations, grants, endowments, or contributions used actually, directly, and exclusively for educational purposes shall be exempt from tax, subject to conditions prescribed by law. Letter B. All lands, buildings, and improvements actually, directly, and exclusively used for educational purposes. That's under Article 6 of the Constitution, Section 28. So what is the basic rationale for the constitutionally granted tax exemption for private, non-government schools? Suggested answer, or SA, the relief given to private non-governmental schools by the Constitution is expected to be passed on to the students in the form of lower tuition fees. In this manner, the schools would be assisting the state provide education for all without using government resources, because it would be the private school that would take the economic burden of providing education. Article 6, Section 28, the Constitution provides that rule of taxation shall be uniform and equitable. Congress shall evolve a progressive system of taxation. What do you understand by a progressive system of taxation? Discuss briefly the rationale for its inclusion in the 1987 Constitution. As a taxation is progressive when its rate goes up depending on the resources of the person affected. Abacada Guru Party List. It should be noted that the foregoing definition is clearly deficient. It is not the mere increase in the rate alone in relation to income, the tax base, but the increase in the tax rate must be a faster rate than the increase in the tax base. If the tax rate increases in the same proportion as the increase on the tax base, the tax is a proportional tax, not a progressive tax. The progressive system of taxation is exemplified by the income tax rate, which increases as the net taxable increases. It is based on the ability to pay and in implementation of the social justice principle, and the more affluent should contribute more to the community's benefit. The progressive system of taxation is constitutionally imposed to achieve social justice through redistribution of income. Progressive income taxes alleviate the margin between rich and poor. Among the general rationale for the progressive system of taxation are the following. It represents a procedurally legitimate outcome of a political process based on sound democratic principles. It furthers, not guarantees, the end of achieving a modest redistribution of wealth. It limits the wealth and power of the extremely wealthy. It compensates for regressive national taxes such as the value added tax. Executive Order 313 intended to create a trust fund out of the cocoa levy funds to provide economic assistance to the coconut farmers and assisting other agriculturally related programs which would ultimately benefit the coconut farmers. Is EO 313 then violative of the Constitution? Yes, clearly EO 313 above runs counter to the constitutional provision which directs that all money collected on any tax levied for a special purpose shall be treated as a special fund and paid out for such purpose only. Assisting other agricultural related programs is way off the coconut or cocoa fund objective of EO 313, promoting the general interest of the coconut industry and its farmers. What are the requisites of administrative due process, or what is known as the Antibay Doctrine? I say the requisites are the right to notice, be it actual or constructive, of the filing of the proceedings that may affect a person's legal rights. Letter B, the right to a hearing, which includes the right to present one's case and submit evidence in support thereof. This is the right of a person to a reasonable opportunity to defend himself, introduce witnesses and relevant evidence. Letter C, a tribunal so constituted as to give the person reasonable assurance of honesty and impartiality, and which must be of competent jurisdiction. D, the tribunal must consider the evidence present. E, the decision must have something to support itself. F, the evidence must be substantial. G, the decision must be rendered on the evidence presented at the hearing, or at least contained in the record and disclosed to the parties affected. H, the tribunal or any of its judges must act on its or his own independent consideration of the law and facts of the controversy. And finally, the tribunal should, in all controversial questions, render its decision in such a manner that the parties to the proceeding may know the various issues involved and the reasons for the decision rendered. Give exceptions or instances where notice is dispensed with before the issuance of an assessment. The following are the instances when notice for informal conference may be dispensed with before issuance of a preliminary assessment notice or PAN, and where a pre-assessment notice is not required before issuing an assessment notice. A, when the finding for any deficiency tax is a result of mathematical error in the computation of the tax as appearing on the face of the return filed by the taxpayer. B, when a discrepancy has been determined between the tax withheld and the amount actually remitted by the withholding agent. Or C, when a taxpayer who has opted to claim a refund or tax credit of excess creditable withholding tax for a taxable period was determined to have carried over and automatically applied the same amount claimed against the estimated tax liabilities for the taxable quarter or quarters of the succeeding taxable year, or when the excise tax due on excisable articles has not been paid, or when an article locally purchased or imported by an exempt person, such as but not limited to vehicles, capital equipment, machineries, and spare parts, has been sold, traded, or transferred to non-exempt person. Explain briefly the meaning of impairment and its rationality as used in the Constitution. There is impairment when a law substantially invalidates, releases, or extinguishes the obligations of a contract, or that derogates substantial contractual rights. Home building. The rationale for the non-impairment clause: when the state grants an exemption on the basis of a contract, consideration is presumed to be paid to the state, and the public is supposed to receive the whole equivalent therefore. Thus, the exemption from taxation will be binding upon succeeding legislation, and a tax could not be imposed without infringing on the impairment clause. So, what circumstances are considered as impairment of the obligations of contract? The circumstances are when a person is deprived of the benefits of his contract, or when the law takes from the party his whole contract and all the rights which it has intended to confer, or when the terms of a statute is altered by imposing new conditions or dispensing with conditions, or which adds new duties or releases or lessens any part of the contract, obligation, or substantially defeats its end, thereby diminishing the value of the contract, changing the intention of the parties, changing the mode of payment, and changing the remedy to enforce the contract without leaving any substantial remedy. What are the requisites for permissible impairment? While it is true that the non-impairment clause protects against the state destruction of the rights arising under or enforcement of existing contracts, there may be instances of legislation modifying contractual obligations. To be valid, the impairing legislation must serve an important and legitimate public interest, and it is a reasonable and narrowly tailored means of promoting that interest. The court should consider, among other things, the severity of the impairment, the reasonable reliance and expectations of the contracting parties, the strength and breadth of the socio-economic problems involved, whether the law serves the general public welfare or benefits only special interests, whether the law operates in an area already regulated by the states, and whether the impact of the law is permanent rather than temporary or immediate as opposed to gradual. What are regulatory taxes? Regulatory taxes are those imposed in the joint exercise of the power of taxation and police power. Taxes raise revenues and at the same time promote general welfare or protect the health, safety, or morals of the general populace. An illustration of regulatory taxes are the cocoa levy funds that were raised with the use of the police and taxing powers of the state for the benefit of the coconut industry and its farmers in general. Pambansang Koalisyon ng mga Samahang Magsasaka at Manggagawa sa Niyugan or PKSMN versus Executive Secretary. What is the nature of the state's power to tax and why is it so? The nature of the state's power to tax is twofold. It is both an inherent power and a legislative power. Taxation is inherent in nature, being an attribute of sovereignty, Chambers of Real Estate and Builders Association versus Romulo. And consequently, it exists with or without a constitutional provision to the effect. This is so because without tax revenues, the state's very existence would be imperiled by lack of funds to perform the essential obligations of the state. Taxation is a legislative power because it involves the promulgation of rules. Taxation is a set of rules. Why should the tax be paid? Who pays the tax? How much is the tax to be paid? To whom it should be paid, and when the tax should be paid. The power to tax is inherent in the state, such power being inherently legislative, based on the principle that taxes are a grant of the people who are taxed, and the grant must be made by the immediate representatives of the people, and where the people have laid the power, there it must remain and be exercised. So, what is the scope of the inherent legislative power to tax? The legislature wields the power to define what tax shall be imposed, why it should be imposed, how much tax should be imposed, against whom or what it shall be imposed, and where it shall be imposed. The legislature is given the discretion to determine the nature, object, extent, coverage, where the situs or place of taxation primarily lies. It is clear from the above that the legislative power to tax does not include collection of the tax, which is none other than the execution of the tax laws that the legislative department has promulgated. By constitutional allocation, collection of taxes is part of the functions of the executive department. The 1987 Constitution, Article 10, Section 5, grants to local government units the power to create their own sources of revenue and to levy taxes, fees, and charges. Discuss further whether or not local government units may levy taxes without an act passed by Congress, on the theory that they now enjoy the sovereign power of taxation, unlike in the past when they possessed only delegated power to do so. Essay: Local government units could not levy taxes without an act passed by Congress. This is so because the provision of the Constitution delegating the power of taxation to local government units is not self-executing. The exercise of the power is subject to such guidelines and limitations as Congress may provide. Presently, those guidelines and limitations are found in the Local Government Code. Petitioner Smart Communications, or SMART, is a domestic corporation engaged in the business of providing telecommunications services to the general public. In the course of its business, SMART constructed a telecommunications tower within the territorial jurisdiction of the municipality of Malvar, Batangas. The construction of the tower was for the purpose of receiving and transmitting cellular communications within the covered area. On July 30, 2003, the municipality passed Ordinance Number 18, Series of 2003, entitled An Ordinance Regulating the Establishment of Special Projects. On 24th August of 2004, SMART received from the Permit and Licensing Division of the Office of the Mayor of the municipality an assessment letter with a schedule of payment for the total amount of 389,950. For SMART telecommunications tower. Is the imposition a tax? The answer is no. The imposition of fees on cell sites is under police power. The main purpose of Ordinance Number 18 is to regulate certain construction activities of the identified special projects, which includes cell site or telecommunications towers. Thus, the fees imposed in Ordinance Number 18 are primarily regulatory in nature and not primarily revenue raising. They are not taxes. While the fees may contribute to the revenues of the municipality, this effect is merely incidental. Quezon City passed Ordinance Number SB 2095 that imposes a socialized housing tax equivalent to 0.5 on the assessed value of land in excess of 100,000. The special assessment shall accrue to the general fund under a special account to be established for the purpose. Effective for 5 years, the socialized housing tax, or SHT, shall be utilized by the Quezon City government for the following projects: 1. Land purchase, land banking. B. Improvement of current or existing socialized housing facilities. C. Land development. D. Construction of core houses, sanitary cores, medium-rise buildings, and other similar structures. And E. Financing of public-private partnership agreement of the Quezon City government and National Housing Authority with the private sector. Under certain conditions, a tax credit shall be enjoyed by taxpayers regularly paying the special assessment. The tax credit to be granted shall be equivalent to the total amount of the special assessment paid by the property owner. Is the imposition valid? Answer is yes. The ordinance imposing the socialized housing tax of Quezon City is valid. The tax is not a pure exercise of taxing power or merely to raise revenue. It is levied with a regulatory purpose. The levy is primarily in the exercise of the police power for the general welfare of the entire city. It is greatly imbued with public interest. Removing slum areas in Quezon City is not only beneficial to the underprivileged and homeless constituents, but advantages to the real property owners as well. The situation will improve the value of their property investments, fully enjoying the same in view of an orderly, secure, and safe community, and will enhance the quality of life of the poor, making them law abiding constituents and better consumers of business products. The city of Makati, in order to solve the traffic problems in its business districts, decided to impose a tax to be paid by the driver on all private cars entering the city during peak hours from 8 in the morning to 9 from Mondays to Fridays, but exempts those cars carrying more than two occupants, excluding the driver. Is the ordinance valid? Yes. It is an imposition under the police power because it seeks to promote the general welfare for the protection of the health, safety, and convenience of the public who would be affected by the traffic problem. Uptown University is a non-stock, non-profit educational institution. It owns a piece of land in Batangas City on which its three-story school building stood. Two of the buildings are devoted to classrooms, laboratories, a canteen, a bookstore, and administrative offices. The third building is reserved as dormitory for student athletes who are granted scholarships for a given academic year. Can the city treasurer of Batangas City collect real property taxes on the land and building of Uptown University? The answer is no. It appears that the land and buildings of Uptown University are actually directly and exclusively used for educational purposes. They are constitutionally exempt from taxation because all lands, buildings, and improvements actually directly and exclusively used for educational purposes shall be exempt from taxation. What are the five circumstances that must be present in order to qualify taking as an exercise of eminent domain which requires just compensation? The circumstances are first, the expropriator must enter private property. Second, the entrance into private property must be for more than a momentary period. Third, the entry into the property should be under warrant or color of legal authority. Fourth, the property must be devoted to a public use or otherwise informally appropriated or injuriously affected. Fifth, the utilization of the property for public use must be in such a way as to oust the owner and deprive him of all the beneficial enjoyment of the property. What is the concept of taking, which requires just compensation? There are two different types of taking that can be identified. Possessory taking occurs when the government confiscates or physically occupies the property. Regulatory taking occurs when the government's regulation leaves no reasonable economically viable use of the property. What is crucial in judicial consideration of regulatory taking is that government regulation is a taking if it leaves no reasonable economically viable use of property in a manner that interferes with reasonable expectations for use. A regulation that permanently denies all economically beneficial or productive use of land is, from the owner's point of view, equivalent to a taking unless principles of nuisances or property law that existed when the owner acquired the land make the use prohibitable. When the owner of real property has been called upon to sacrifice all economically beneficial uses in the name of the common good, that is, to leave his property economically idle, he has suffered a taking. Next question is interesting. Evaluate the Philippine tax system from the viewpoint of a sound tax system? Answer: the Philippine tax system is not a sound tax system because it does not meet the principles of a sound tax system. It is not fiscally adequate because the revenues generated are sufficient to finance the operations needs to the government. This is exemplified by the billions of pesos that the government has to borrow domestically and internationally in order to fund government expenditures. There is also no theoretical justice because the burden falls upon the poor. This is illustrated by the fact that most tax revenues are generated by indirect taxes. The tax system is likewise complex that it violates the principle of administrative feasibility. Some taxpayers still find difficulty in applying the VAT, so also the two methods of taxing corporations result to confusion. Explain and illustrate fiscal adequacy as a principle of a sound tax system. This means that the tax system must be able to provide sufficient revenues in order to meet the legitimate objects of the government. Stated otherwise, the taxes collected must be able to finance government expenditures and their variations. As an illustration, to continue collecting real property taxes based on valuations has arrived at several years ago, in disregard of the increases in the value of real properties that have occurred since then, is not in consonance with a sound tax system. Fiscal adequacy requires that the sources of revenues must be adequate to meet government expenditures. So what is meant by theoretical justice as a canon of sound tax system? The tax should be collected on the basis of ability to pay to a progressive system of taxation. Thus, the incidence or burden of taxation should fall more on those who could afford. Explain administrative feasibility as a principle of sound tax system. The tax measures should be easily implemented in order to assure the smooth flow into the treasury of the fiscally adequate amounts. So, are tax laws imprescriptible? As a general rule, the right of the government to collect taxes is imprescriptible because the very existence of the state depends upon the exercise of this power. Where the government has not, by express statutory provision, provided a limitation upon its right to assess and pay taxes, such right is imprescriptible. The statutes may, however, provide for prescriptive periods for the collection of particular kinds of taxes in order to respect the due process rights of taxpayers. What are the exceptions to the territoriality rule? Instances where tax laws operate outside territorial jurisdiction. Number 1, taxation of resident citizens on their incomes derived from abroad. Number 2, where tax laws do not operate within the territorial jurisdiction of the state. When exempted by treaty obligations, when exempted by international committee. What determines situs of taxation? In general, situs of taxation is determined by the place that gives protection, which has the right to levy and collect taxes. Specifically, the determinants are the following. Letter A, the benefits protection theory, or the symbiotic relationship. The reciprocal relation of protection and support between the taxpayer and the state. The state gives protection, and in order to continue giving protection, it must be supported in the form of taxes. Letter B, jurisdiction. State of or political unit that gives protection has the right to demand support. Technically, tax laws are jurisdictional or operate only within the territorial jurisdiction of a state because that is where it could give protection. This is subject to the concept of mobilia sequentur personam. Note, not part of the answer. There is a distinction between a question asking for situs of taxation in general, such as the question above, and one which asked for the situs of various kinds of taxes, such as the situs of income taxation, the situs of estate taxes, and the situs of property taxes. So, situs of taxation means the place of taxation, the state which has jurisdiction to impose a particular tax on persons, property, or transaction, bearing in mind that the general rule on situs of taxation and the provisions of the National Internal Revenue Code, what is the situs of taxation of the following, stating the basis for your answer. Transfer of property by death. For resident dissidents, whether Filipino citizens or not, the situs would be irrespective of whether the property is real or personal, tangible or intangible, is located, and in the case of a non-resident dissident who are not Filipino citizens, the situs would only be those property situated in the Philippines. Property situated in the Philippines. The places of situs are the places that gives protection. How about the transfer of property by gifts? The Philippines is a situs of taxation of the donation or transfers of property by gift. Donations made in the Philippines, irrespective of the nationality of the donor, as well as the location of the property. The basis is the protection made by the activity, which is the act of donation. Donations made outside of the Philippines where the donor is a Philippine citizen, irrespective of his residency or location of the property donated. The basis is the protection given to the donor who is a Filipino citizen. Donations made outside of the Philippines where the property donated is located in the Philippines irrespective of the nationality or residency of the donor, the Philippines gives protection to the property that is donated. That is why it is the situs of taxation. Note, not part of the answer. It is to be noted that the residence and nationality of the donee are not taken into consideration for determining whether the donation is subject to Philippine donors taxation or not. Again, it is to be noted that the residence and nationality of the donee are not taken into consideration for determining whether the donation is subject to Philippines donors taxation or not. Business and occupation. The situs of business and occupation is the place where the business and occupation are being conducted. The reason being that this is the place which gives protection to the business or occupation. How about in real property? The place where the real property is located under the principle of lex re cite or lex situs because of the following reasons. The taxing authority has control because of the stationary and fixed character of the property. B. The place where the real property is situated gives protection to the real property. Hence, the property or its owner should support the government of that place. But of personal property, the basis of taxation is determined by the nature of the property, whether it is tangible, intangible, or mixed. For tangible personal property, the basis is mobilia sequuntur personam, or movables follow the person. The situs of taxation is the place where the owner is found. This is generally where the owner resides. The domicile of the owner is the place that provides protection to the property because the intangible follows the owner. For intangible personal property or mixed, the basis is the place where the property has acquired a business situs. For example, taxes imposed on the sales of Philippine stocks or stocks in domestic corporations are taxable in the Philippines no matter where they may be found or where the owner's domicile is located. How about for excise taxes? The situs of taxation of excise tax would depend whether the article is a domestic product or mineral, an imported article. Situs of taxation of the excise tax on a domestic product or mineral. The situs is the place of production or where mined or extracted. Situs of taxation of imported articles, place where the custom house from where released is located. In case of tax-exempt articles, where the possessor is not entitled to the exemption, then the place where the possessor is found. Situs of franchise tax, which is an excise tax. It should be stressed that what the city of Iriga seeks to collect from Kazureko is a franchise tax, which, as defined, is a tax on the exercise of a privilege. City of Iriga versus Camarines Sur. The franchise tax shall be based on gross receipts precisely because it is a tax on business rather than on persons or property. Since it partakes of the nature of an excise tax, the situs of taxation is the place where the privilege is exercised. In this case, in the city of Iriga, where Kasureko III has its principal office and from where it operates, regardless of the place where its services or products are delivered. Hence, franchise tax covers all gross receipts from Iriga City and the Rinconada area. How about sales of property? The situs of taxation depends upon whether the property is real or personal. Gains, profits, and income from sale of real property located in the Philippines are treated as gross income from sources within the Philippines. Thus, the situs is where the real property is located. So, tax treatment of gains, profits, and income derived from the sale of personal property, gains, profits, and income derived from the purchase of personal property within its sale without the Philippines, or from the purchase of personal property without and its sale within the Philippines, shall be treated as derived entirely from the sources within the country in which sold, provided, however, that gains from the sales of shares of stock in a domestic corporation shall be treated as derived entirely from sources within the Philippines, regardless of where the said shares are sold. Illustration of situs of sale personal property. Sales of encyclopedias were considered as perfected and consummated in the U.S. because of showing that when the Philippine distributors placed and or sent their specific orders to P.F. Collier U.S., they already knew the price of the books. Such orders were shipped by the vendor in the U.S. direct to the different buyers in the Philippines. What circumstances are considered as impairment of the obligations of contract? As say the circumstances are when a person is deprived of the benefits of his contract, or B, when the law takes from the party his whole contract and all the rights which it has intended to confer, or C, when the terms of a statute is altered by imposing new conditions or dispensing with conditions, or which adds new duties or releases or lessen any part of the contract, obligation, or substantially defeats its end. Oshkosh Waterworks versus Oshkosh. Thereby, 1. Diminishing the value of the contract, 2. Changing the intention of the parties, 3. Changing the mode of payment, and 4. Changing the remedy to enforce the contract without leaving any substantial remedy. So, what are the requisites for permissible impairment? While it is true that the non-impairment clause protects against the state's destruction of the rights arising under or enforcement of existing contracts, there may be instances of legislation modifying contractual obligations. To be valid, the impairing legislation must serve an important and legitimate public interest. B, is a reasonable and narrowly tailored means of promoting that interest. The court should consider, among other things, 1. The severity of the impairment, the reasonable reliance and expectation of the contracting parties, the strength and breadth of the socio-economic problems involved, whether the law serves the general public welfare or benefits only special interests, whether the law operates in an area already regulated by the state, and F, whether the impact of the law is permanent rather than temporary or immediate as opposed to gradual. Energy Reserves Group versus Kansas Power of Light Company. Briefly explain again the symbiotic relation principle. The symbiotic relation principle is the reciprocal relation of protection and support between the state and the taxpayers. The state gives protection. For it to continue giving protection, it must be supported by the taxpayers in the form of taxes. Situs of taxation means the place of taxation, the state which has jurisdiction to impose a particular tax on persons, property, or transaction, bearing in mind the general rule on situs of taxation and the provisions of the National Internal Revenue Code. What is the situs of taxation of the following stating the basis for your answer? Transfer of property by death. For resident dissidents, whether Filipino citizens or not, the situs would be irrespective of whether the property, real or personal, tangible or intangible, is located in the case of a non-resident dissident who are not Filipino citizens, the situs would only be those property situated in the Philippines. The place of situs are the places that give protection. That's the basis of the answer. Now, letter B, transfer of property by gift. The Philippines is the situs of taxation of the donation or transfer of property by gift. Donations made in the Philippines, irrespective of the nationality of the donor, as well as the location of the property. The basis is the protection made of the activity, which is the act of donation. Number two, donations made outside of the Philippines, where the donor is a Philippine citizen, irrespective of his residency or location of the property donated. The basis is the protection given to the donor who is a Filipino citizen. Number three, donations made outside of the Philippines, where the property donated is located in the Philippines, irrespective of the nationality or residency of the donor. The Philippines gives protection to the property that is donated. That is why it is the situs of taxation. Notes not part of the answer. It is to be noted that the residence and nationality of the donee are not taken into consideration for determining whether the donation is subject to Philippine donors taxation or not. Business and occupation. The situs of business and occupation is the place where the business and occupation are being conducted. The reason being that it is the place which gives protection to the business or occupation. How about taxes on real property? The place where the real property is located under the principle of lex recite or lex situs because of the following reasons. The taxing authority has control because of the stationary and fixed character of the property. Number two, the place where the real property is situated gives protection to the real property, hence the property of its owner should support the government of the place. Now, for personal property, the basis of taxation is determined by the nature of the property, whether it is tangible, intangible, or mixed. For tangible personal property, the basis is mobilia sequuntur personam, means movables follow the person. The situs of taxation is the place where the owner is found. This is generally where the owner resides. The domicile of the owner is the place that provides protection to the property because the intangible follows the owner. For intangible personal property or mixed, the basis is the place where the property has acquired a business situs. For example, taxes imposed on the sales of Philippine stocks or stocks in domestic corporation are taxable in the Philippines no matter where they may be found or where the owner's domicile is located. How about excise taxes? The situs of taxation of excise tax would depend whether the article is a domestic product, mineral, an imported article. Situs of taxation of the excise tax on a domestic product or mineral. The situs is the place of production or where mined or extracted. That is found in section 130, letter A, number 2, 1997 in IRC. Situs of taxation of imported articles. Place where the custom house from where released is located. In case of tax-exempt articles where the possessor is not entitled to the exemption, then the place where the possessor is found. Situs of franchise tax, which is an excise tax. It should be stressed that what the city of Iriga seeks to collect from Casureco, the third is a franchise tax, which as defined is a tax On the exercise of a privilege, City of Iriga versus Camarines Sur, third, Electric Cooperative, Casureco, the third, or GR 19245. The franchise tax shall be based on gross receipts precisely because it is a tax on business rather than on persons or property. Since it partakes of the nature of an excise tax, the situs of taxation is the place where the privilege is exercised. In this case, in the city of Iriga, where Casureco III has its principal office and from where it operates, regardless of the place where its service or products are delivered. Hence, franchise tax covers all gross receipts from Iriga City in the Rinconada area. How about the sales of property? The status of taxation depends upon whether the property is a real or personal. Gains, profits, and income from sale or real property located in the Philippines are treated as gross income from sources within the Philippines. Thus, the situs is where the real property is located. Tax treatment of gains, profits, and income derived from sales of personal property, gains, profits, and income derived from the purchase of personal property within an its sale without the Philippines or from the purchase of personal property without and its sale within the Philippines shall be treated as derived entirely from the sources within the country in which sold. Okay, thanks for listening. Let's pick up from here and we will read the bar answers to the three questions asked for this year. Thanks.